Welcome back, everyone. I hope everyone's been having a great day so far. I would like to introduce Kathleen Casey, the CEO of Simply Better Brands, which trades on the OTCQB under the symbol PKANF and on the TSXV under the symbol SBBC. So after 30 years in blue chip companies like Procter & Gamble and Kellogg, Kelly now leads a high growth wellness company called Simply Better Brands. The company is a high growth omni-channel platform with disruptive brands in the emerging plant-based holistic wellness and lifestyle consumer product categories. They focus on leading clean ingredient innovation for the informed millennial and Gen Z generations on their active lifestyle and wellness journey. Pleased to introduce the CEO, Kathleen Casey. Welcome, Kathy.
Hey, thank you, Anna. I really appreciate the time today. I'm looking forward to spending it with you and the team and everybody watching, so thanks.
Wonderful. Well, the floor is yours whenever you're ready. Thank
you. I'll pick it up where you left off. So again, my name is Kathleen Casey. Thrilled to be here. Let's start with really, I'd say, three topics today. One is I want to give you an overview of Simply Better Brands. The second thing is talk to you a little bit about where we source our growth. And then lastly, tee up for you a little bit where we go next, right? In terms of the portfolio and the company. As Anna had mentioned, we really are a wellness company, and I know wellness means a lot of things to different people. So we'll click it down one more level and say it's not just wellness, but it's actually plant-based wellness, and it's actually very clean ingredient wellness. So we have incredible guardrails about what brands we build and what goes in and around and on our products. And so we'll take you into a little more detail with that today. But essentially from wellness to clean ingredient. And then we grow the business both organically by growing our current portfolio and then through acquisition. We actually have done 6 acquisitions over the last 20 months that have came into the portfolio. We look for emerging and nascent brands. We bring them into the portfolio. We put them into a classic consumer products good model. And then we build those brands into omni-channel brands. And then lastly, should it make sense, our business model is that we can also sell those brands and use that profit from that sale to then, of course, go back and buy and build other brands. So in many ways, we are a brand incubator is the way to think of the company. If you look at 2022, we are positioned to do about $50 to $55 million in sales and be positive EBITDA with a 60 to 65% gross margin, while at the same time we reducing our debt. So we feel good about, if you will, the P&L and the balance sheet as we look at the business going forward. A couple pages here we'll click through quickly. One, of course, the natural obligatory disclaimer sheet, which we have here about forward statements like the one I just made. And then, as Anna mentioned, a little bit not just about where we play, but also some values that we have. So we operate both with consumers and candidly with investors and shareholders with some core values around safety, transparency, and certainly efficacy of our products. And we have a couple mandates of how we operate. One is profitable growth over time, as well as consumer-centric innovation. We believe the concept of Simply Better Brands is incredibly on trend. I've been in health, wellness, food, beverage my entire career. And I think never before in our history have we seen consumers so informed about what they're putting in, on, and around their body. We target, as you see here, millennials and Gen Zs for that reason, because we find them incredibly informed on their wellness and lifestyle journey about where they spend their money, not only mission-driven companies and purpose-driven companies, but companies with brands and portfolios that meet those very strict requirements that they have. And so we go find those brands and then bring them into the portfolio. And it's my pleasure to actually take you through a few of those as we go through the presentation today. We operate really in 3 verticals, as I referenced. The first one here, of course, is plant-based wellness, and that's our PureKana brand. It originally started as a CBD brand, and then we've evolved it into a wellness brand over time. The second category is our clean ingredient food brand. We could see beverage could come into that over time, but for right now, it's primarily food. And that's a bar that we call True Bar, which we'll take you through in more detail. And then the last one I call Next Generation Beauty. And that's really our No BS skincare brand, which is just a fun and irreverent brand that we get the opportunity to be able to build. You know, as potential investors or shareholders or consumers, what I want to do next is take you deeply into each of these 3 brands, or at least a little overview with the time we have, so that you can understand the brands and how we position them in the marketplace. PureKana, as I said, originally started as a CBD brand. And for those of you that know CBD know how competitive that space is. We actually have evolved it from just a CBD brand into a wellness brand. So actually, there's items in the portfolio that are not just CBD. Some of them actually don't even have CBD in them. So, and we don't believe that CBD is actually a category anymore. We believe it's an ingredient. And we formulated the portfolio in a way that has that ingredient live in some items and not. We actually, instead of focus on CBD, we actually focus on what consumer need are we solving for. So you can see here on bullet point number 3, we actually take potentially CBD or not, or other active ingredients, and we solve for consumer problems in a few key need states. You can see your calm, sleep, pain, immunity, recreation, the latest one of weight loss. And we surround these plant-based ingredients with a formulation that's proprietary with us, with blends of cannabis that are proprietary to us. We put them through OTC FDA facilities, and we actually just see on the bottom there get 93% repeat rate once a consumer tries our brand to either buy it again or send it to a consumer. So what's most known about PureKana is actually its efficacy. And we'll take you with where we're taking that brand next. But we have broke through essentially 3,000 brands to be one of the top 10 brands in the category. There's only about 10 brands in the United States that do more than $1 million a year, and PureKana happens to be one of those. And actually, just about a month ago, was recognized as one of the fastest growing brands in this particular space in the United States of America. The second brand is True Bar. I've been doing bars for a long time. I did bars for about 20 years at Kellogg. And what I tell you is, although people like to eat healthy products and take care of their bodies, a bar category user will not sacrifice taste. Predominantly because people that buy bars and consume bars often are heavy users and consume them every day. And so what you find with True Bar here is a product that not only, as you can see, has an incredible clean ingredient and short stack formulation around organic, non-GMO, gluten-free, dairy-free, soy-free, no added sugar alcohols. It's actually even vegan. It gives you 12 grams of plant-based protein and only 190 calories, which is a pretty good calorie count for a protein bar. And essentially, it mixed this clean ingredient deck with just incredible taste and really indulgent flavors, as you see here, that we have a little fun with, like, cookie dough, salty, delicious almond love. The product does extremely well with consumers because they like the taste. But as we put it into retailers, and we're in roughly a half a dozen retailers in the US, half a dozen retailers in Canada, it usually and consistently beats the category averages. So to give you an idea, there's big bars volume sold throughout club stores, and where we've actually put it in roughly half the Costco buildings in the United States, it actually consistently exceeds the velocities in the category. So we think there's real upwards potential for True Bar. If you look at roughly 2022, this brand will grow about 5 times what it did a year ago. The last one is No BS Skincare. This is where, if you think of big brands that maybe your sisters or your moms, or maybe even your brothers or your dads used, like a Neutrogena or an Oil of Olay, that live within the category, those big brands no longer meet the needs of consumers for what they want in terms of ingredients and the products that they used. And so if you look at skincare in the European Union, they ban about 50 ingredients. We ban in our brand 1,500 ingredients because we think that consumers absolutely care what goes on and around their body, because ultimately personal care, skincare is consumed and absorbed throughout your system. And so this brand, a little bit irreverent positioning of it, we call No BS is no bad stuff. You can use your imagination, because we don't believe in the BS of the way some skincare and beauty brands are marketed. But at the end of the day, it's really the clean ingredient profile that takes folks that have bought these big brands in the past and actually lapse consumers from those brands that ultimately come over and buy No BS skincare. This brand right now is up about 50% versus a year ago. When we have these brands and we look at the future innovation pipeline, because for you, it's not just what we're doing today, what the potential is going forward, we actually try to solve consumer problems. I'm a consumer product scout. It's what I've done my whole career. And so we look at wellness or fitness or beauty and what are people trying to solve for, and we actually drive our innovation pipeline around these 8 buckets. So we have offerings today in the portfolio that live in calm, sleep, pain, immunity, recreation, and energy. We just launched, as I mentioned earlier, our first interest into weight loss with keto. It's doing extremely well. And then, if you will, the next innovation pipeline territory that we are focusing on is actually through focal acuity or nootropics. So essentially bringing a pipeline forward of consumer problems that we can create IP and formulations that are proprietary for us under these few big brands to resonate with consumers on this wellness and lifestyle journey. To give you a couple of examples of where this activates and how this happens, is that I just want to share with you briefly, the innovation portfolio that's coming up later this year, and some of them, one may go into early next year. But as I referenced, we not only grow through acquisition, but we also grow through category expansion. And on this page, you'll see, as I referenced earlier, PureKana will not only stay in wellness and CBD, but also evolved into weight loss and focal acuity. This enables us to capture into other categories and, of course, get bigger pieces of pie and bigger categories, like a category like sleep is an example, which is so huge, and make a bigger or larger umbrella brand as it relates to PureKana. TrueBar, which originally started as a bar, of course, the blue package here will now go over and enter into protein powder. And then No BS Skincare, that's been primarily a topical skincare offering, the tube in the middle here will actually now enter very clean ingredient, all natural personal care with the deodorant offering. So as an investor, as a shareholder, as a potential consumer, essentially we'll take these brands and we'll make them stretch and travel to where it makes sense with the same promise of the umbrella brand that we had under PureKana, TrueBar, and No BS. Where can you find the brands? What's our route to market? How do we grow the company? So as you see down the lower left, as I mentioned, acquisition historically has been a big part of our growth. Consumer-centric innovation, we already chatted on. We do an extensive amount of research. We find out what's topical for a particular consumer in terms of what drives their purchase intent. And then we bring innovations formula in that particular space that solves their problems. The third area, and fourth and fifth down here, is actually really about expansion. And we expand by category, which we just referenced. We expand by channel. And ultimately, we expand by geography. And we'll take you through some of those plans here in later pages. But I did want to put this page on here because my background, of course, with Procter & Kellogg was taking brands not just into e-commerce, but also into brick and mortar. And I've actually worked across every class of trade, as most of our sales and marketers have that are within our company. And essentially what TrueBar, No BS, and PureKana started primarily as direct-to-consumer or e-commerce brands. We're now taking those brands and sourcing significant growth by putting them into multi-channel or omni-channel environments. And I put this on here just to give you a little bit of a flavor. This certainly isn't all of our customers, but you can see where the brands resonate today. A couple of our biggest customers on this page would be someone like a CVS, a Rite Aid, a Costco, as an example, where you'll see the brands resonating primarily on this page throughout the Canadian as well as the U.S. market. For example, Costco is one of our big TrueBar customers. Originally we got one region of Costco in the U.S., which is like 1/8 of the country. And eventually you get region 2 and 3 and 4 and 5. So we've now been in over half the regions of Costco in the U.S. And we were in Canada about a year and a half ago. And now we'll be entering Canada again, coming up here in Q4 into Eastern Canada with Costco, and then back into Los Angeles here in Q1 of next year. And actually have some pretty extensive plans as it relates to Costco to expand that distribution even further as we go into 2023. But it gives you a little bit of a context about where we source our growth and why we have a level of confidence that we can actually have these brands become larger, if you will, mega omni-channel brands. A little background, that's a little bit of the commercial, brands, portfolio, Simply Better Brands, how we grow, where we grow. This year, as I said, we plan on doing 50 to 55 million, essentially 3x year ago. We believe as we look at 2023, we've put out no official guidance, but if we can do 3 times this year, we believe we're somewhere in the line of sight of potentially 2 times as we look at 2023. The stock profile here, I do have one error, I thought. Drives me crazy when you make an error. But if you look at, Ann had mentioned the OTC stock symbol is PKANF, not PFONF. I don't know. Not even sure what that company would be. But that's an error and a typo that will get changed as we distribute this presentation further. But essentially, we're trading the Toronto Stock Exchange. We're traded on the over-the-counter here in the U.S. Stock is affordable at 31 cents a share. That's 31 cents Canadian. We have pretty good volume on the stock for a small cap company of our size. Our 90-day average, as you can see there, is roughly about 660,000. A small float. So we only have 41.6 shares outstanding today. We have chosen not to overly dilute the company. We're very, very mindful about our dilution because we know as we dilute, it has impact on our shareholders and ultimately the ability for the price of the stock to appreciate. So 41.6 is outstanding, and I think fully diluted, we're somewhere in the range of 47. I think high 46, low 47 million. Cash on hand is good. We just actually did a private placement raise and a convertible debenture raise. We've got a couple $1 million in the bank and have confidence about our cash position. And then lastly, as you see down there bottom, not only good growth of roughly 3 times a year ago, I think it's like 330%, but the business is ran and growing with good margins. So our outlook says 63 to 65. So far year to date this year, we're at 68. Through the first half of the year, we're at 69 in Q2. We are adjusted EBITDA positive as we sit here today. So we were down a little bit, adjusted EBITDA positive in Q1. And then we came back in Q2 to be up $700,000 in positive adjusted EBITDA, and essentially in the first half, roughly flat. I think down about $100,000. And a commitment to us and to our shareholders that will be adjusted EBITDA positive as we think about 2022 on a full year basis. We're also very, very mindful of our debt. Like any company, we had to incur some debt to get the company up and running and to secure and buy and fund some of the growth of the brands. But we are mindful not only of the debt we have, but to reduce the debt. So as an example, if you look at our debt position today versus back in the end of 2021, our debt's actually down a little over $5 million versus December of 2021. So we feel good about the debt. And as you see there, just good documentation here on the right side, reason to believe around growth. We just finished our 6th consecutive quarter of growth versus a year ago. And you'll see there originally the big blue bar is PKANF. And then you'll start to see some of the other acquisitions start to materialize. As you can imagine, you have to buy these companies and then get to know the teams, get to know the brands, understand the vision of the founder of the brands, which many of those founders are still with us today, and then put them into the model where you start to kind of feel good about how and where you responsibly source the growth. And we're starting to see that not only materialize on PKANF, but of course on No BS and TrueBar as well. With that said, a quick idea on milestones. I was asked to share a little bit of the milestones of the company. Where are we today and where are we going next? A lot of the first 3 buckets I've covered, right? We went public back in December of 20. We were on an aggressive M&A appetite as it relates to 21. We spent 22 really getting the fundamentals right, integrating the businesses, being good financial stewards about how we put together, if you will, the marketing plans of said brands, take them into a couple countries like India and Costa Rica. And then also, as I referenced earlier, really look at how we can expand the brick and mortar footprint of the brands. What's next? It's the same play. The play is working, right? Around expanding by category and by channel and by geography. We certainly will and do see future acquisitions as a component of that growth as well as organic growth. But you'll see us enter UK, Mexico markets here over the next 3 to 6 months. We'll expand our pet portfolio and also have a line of sight around vertically integrating select portions of our supply chain. So net, a quick summary, and this is where I think there's potentially an investor opportunity here, is that, high growth, strong brands, very, very consumer-centric innovation, all focused on expansion. But to give you a quick rundown of kind of the revenue, revenue in 2021 was $15.1 million. Revenue for the first half of the year is $29 million. So we've had a good, strong first half. And our revenue for the full year, as I referenced, is $50 to $55 million. You can see, obviously, we're a little ahead of that $50 to $55 million pace as we sit here halfway through the year. Ironically, though, our market cap is actually only $12.5 million. This is as of yesterday's stock price, today's stock price. I think this assumes a stock price of about 31 cents a share. And so as you can see that, our market cap is really not caught up to potentially our revenue forecast. Obviously, that market cap right there would put us at our market cap to be about 0.25 or 25% of our forecasted annual revenue, and roughly less than half of what even our 6-month revenue is. And so we feel good about, not only good fundamentals, but the potential opportunity, obviously, for the stock to appreciate over time. With that said, Anna, that's a quick rundown, but we wanted to save a little time for questions. So I will turn it back over to you if we had anything submitted.
Oh, we do, Kathy. We've got lots of questions. Let's start. I want you to talk a little bit more, share more insight into your geographic expansion. You touched upon that, but hash that out a little bit for us.
Yeah, sure. We've got actually plans already in place. So if you think of Mexico, which there's so much population, as you know, in Mexico, we have plans in place to actually enter a joint venture in Mexico, and that will include all 3 of the brands. PureKana, TrueBar, as well as No BS Skincare will all be in a JV going into Mexico, as well as a JV that's built around. We can add other brands as we buy and build and develop those brands. PureKana already has a distribution partner, all set up to be able to enter the UK. No BS is already in a half a dozen countries: India, Australia, Western Europe, and they'll continue to expand within Western Europe. And then, as I referenced earlier, certainly TrueBar heading more robustly and intentionally into Canada.
All right. Your 2022 full year revenue outlook, it seems a little conservative. Can you elaborate on it?
Yeah, you sound like our board. Yeah, we get a little feedback on that. I will tell you that I've spent in many years in corporate America. One of the things I've always tried to do is not to disappoint our board or not to disappoint our leaders. So you certainly could say the number is conservative. 55 million. We're already at 29 halfway through the year, or ahead of 50% of the guidance. I wouldn't really call it conservative. I would call it cautious. We want to build a reputation over time with our investors and our shareholders that we do what we say we're going to do. And at this point, we feel have a high level of confidence that we'll be able to deliver that particular number. Although it seems conservative halfway through the year, it is 300% versus a year ago. So we're mindful about our commitments and our ability to be able to deliver them.
Great. And let's talk about your plans to improve your EBITDA.
Yeah, we understand that's not just growth at all cost, right? That investors want to see growth, but then also want to be able to see profit at the bottom line. We feel good about our progress. So last year in the first half, we lost, I think about 1.5 million, if you will, of EBITDA. So our improvement in the first half of 2022 is actually 1.3 million versus 2021. In Q1, we lost 900,000. Q2, we came back and made 700,000 to be roughly flat, losing about 100 for the first half of the year. And we'll continue to work on that. I will say, though, that we are a growth company, and we are prioritizing at this early stage in the company's development. We're prioritizing growth over profit. We believe that long-term, taking that profit and investing it back in building the brands creates the greatest long-term shareholder value as it relates to our investors.
Tina Macedo wants you to explain why the marketing expenses has been growing exponentially to sales, and how can the company reduce those marketing expenses? And does the company need outside help to see where these expenses need to be cut?
Yeah. So great question, Tina. Thank you for submitting it. If you think about our marketing expenses that we have right now, the number one area where we're spending marketing is actually building the PureKana brand. If you look at some of our big competitors, actually the other big 2 publicly traded competitors, both of their volume is declining year over year. And our volume on PureKana is up, actually, as you referenced, 300%. That's through a program that we market against, and it's a way that we acquire customers. We acquire customers anywhere from 13 to 15,000 customers every month against the brand via the marketing initiative that we have around customer acquisition. I hear you, Tina. I get concerned about marketing too. We continue to look at ways to reduce investment, optimize investment. What I will share with you is that if you look at the numbers from Q1 to Q2, we're actually down about 9 full points as a percent of sale in marketing. So we see the marketing investment. We know that it's high. The good news is we're getting good return on it, and we're capturing consumers. And as a pure kind of consumer comes into the brand, 90% of them stay in the brand. So we feel like it's a good one-time upfront investment. Q2 certainly comes down the 9 points that I had, and we'll certainly look to optimize that throughout the year. We also believe, even though there's heavy marketing as it relates to PureKana, that we are getting a return on. PureKana is adjusted EBITDA positive even with that investment. That as the marketing mix changes over time on the broader portfolio, as a percentage of sales, marketing will ultimately continue to decline.
Thank you for that answer. Dustin F. Wants you to give more details on the UNFI distribution, and is it for TrueBar or No BS or both?
Yeah, good question. So if you look at that one page where we went through a bunch of the different retailers, one of the retailers / distributors that we actually added, good catch by you, Dustin, that we actually added during our earnings call was the addition of UNFI. And UNFI, for folks that are closest to it, does a lot of natural store distribution throughout the United States. They're a good partner to have if you want to get to some of the regional chains. And so, Dustin, for you, UNFI is for TrueBar, and we service Whole Foods and a couple of other regional chains of the TrueBar distribution through UNFI.
Great. Claire Snyder wants to know, how do you typically structure your acquisitions? Is it cash, stock, both?
Yeah, great question. One of the reasons that it was really important that we took the company public was really for acquisition currency. And so if you look back into some of the term sheets that would be in some of our news releases when you're bored and you feel like you want to read something, they almost all have been either 100% stock or a stock with a little bit of cash.
Okay. Lee Torres wants to know, how many SKUs do you have? And are you focused more on product, category expansion, or demographic of sales expansion?
Yeah, I have no idea how many SKUs we have. So you've caught me on that one. With 6 companies and adding SKUs and declining SKUs, I can tell you PureKana has about 130. I would say in total, we're probably about 160 SKUs. And to your point, the way we source growth is through category, through channel, and through geography.
Arnold Jenkins wants to know about any white label for other brands out there. Do you have any?
We do not white label for any brands today. I will tell you, though, and some of you that have been following our stock, we did have plans in place to vertically integrate by buying our own supply chain or manufacturing as it relates to the PureKana brand. That got put on hold because of some of our stock performance. But we do have plans on vertically integrating. And at that point, when your marketing is, if you will, when your manufacturing is more efficient, we certainly white label could be an opportunity, but we do none of it today.
And Craig Chong wants to know, he wants you to touch on marketing expenses. You mentioned that, but go on that one more time to answer that for Craig.
Yeah, I think we referenced some of that already, but just for Craig, the way the model works is that we acquire a new customer and we pay a fee for that one customer, but we only pay it one time. And then that customer stays in the funnel. Usually, if you look at the metrics, that customer stays in the funnel, usually 60 to 70% of the time, a second time. And so it is a one-time upfront cost to acquire a new customer that then we have lifetime value of about 2.5 times to keep that consumer ultimately in the funnel. Now, as I referenced earlier to Tina, we'll work to continue to optimize to try to reduce that cost. But right now, where so many wellness and CBD brands are declining and we're bucking that trend via growth is due to the marketing investment that we have.
Great. Pat Adkin wants to know, your convertible debenture, is it floorless based on a percentage or is it at a fixed price?
It's at a fixed price. If you want to go, I don't have it open right now, but if you want to go into the convertible debenture news release, all that's very, very clearly outlined in there, but you have a right to convert at said price.
Great. Alice Foster says, congratulations on the explosive top line growth. You're currently trading at less than 1 times earning. Is that correct? And when do you think you will start seeing positive earnings per share?
Yeah, good question. The page I have up here now addresses a little bit of that. We are at positive adjusted EBITDA today, but to your point, we still do have a net income loss that we're working on trimming down and making progress against over time. But to my earlier comment, we are a growth company. We're early in our build, and we will continue to prioritize ultimately growth over profit, not in a reckless way, but to build long-term shareholder value. We do believe, though, as you can imagine, as these brands go from $2 million brands to where PKANF is now a $42 million brand, we definitely see economies of scale that'll give us over time line of sight to positive profit.
Brendan Casey simply says, great job. That's always nice to have positive feedback. Travis Swallow asks, have there been any continued conversations with Jones Soda Company following the acquisition attempt earlier this year?
Yeah, we were disappointed about the Jones acquisition. As you saw, or as you're referencing, we did have a letter of intent to be able to buy Jones Soda. Probably now, I think it was back in June. The deal did not go to the next level as voted on by both of our boards. Some of it driven by, as you guys know, the markets around the U.S. and globally have had a lot of gyrations to them, and candidly, our stock prices by both companies changed materially during the Jones deal to the point where it made prudent sense for us to walk away. And I do not, at this point, we've had no further discussions with them about resurrecting, if you will, that term sheet or that merger.
Well, a follow-up question about the Jones from Kevin Thompson. First of all, Kevin says, thank you for today's update and keep up the good work. That just went away. Sorry. 1 second. Let me go on to Nicholas Campea. Nicholas asks, does SBBC have any intention to list on the NASDAQ?
Yes, we'd love to. So our route, our envisioned route is similar to many other companies as you look at the route to market. So we originally right now, as you know, are on the Toronto Stock Exchange Venture Board. And then we also then went over to the OTC board in the US. We're also traded on the German Stock Exchange as well. But a typical, as you know, process can be kind of venture board of Toronto up into the senior board of Toronto, and then eventually over to the NASDAQ. Or onto ultimately the New York Stock Exchange. Two barriers to that. One, you have to usually have enough track record of sales and profit and market cap to be eligible to go to some of these bigger boards. As an example, I believe your share price to get on the NASDAQ has to be $3 or higher. So one, we need to get our share price moving in the right direction, which we believe that we will through just good fundamentals and good sales, Nick. And then ultimately, we definitely plan to upmarket.
This is fascinating stuff, Kathy, stuff that I definitely believe in. Do you have any closing remarks for our audience today?
No, just that we operate with a great deal of transparency. You know, we recommend if you buy our products or if you invest in our company or you buy your shares, we take this seriously. We've got an outstanding CFO in Brian Meadows and a great group of sales leaders and marketers that have produced this results. And I just want to, if they're watching, say thank you to. It's some heavy lifting, as you know, to integrate 6 businesses over the course of 20 months. We feel the fundamentals are strong. We feel the outlook is deliverable. And we really just think that we're just getting started. So thank you, Anna.
Great. I'll be on the lookout for the True Bar and No BS products. Thank you, Kathy.
Sounds good. We appreciate it. Thanks all.
Okay, everyone. What a great day we've had. So many thrilling presenters, so much going on. We're so happy you all are here. Remember, in just a moment, you'll be redirected to the registration page for our next conference in 2 weeks. So reserve your spot early. On behalf of all of us at Emerging Growth, thank you to all of our presenters and the thousands of attendees that are watching and joining in with the conversation as we make this Emerging Growth Conference such a great success. Remember that there'll be a complete replay of this conference on our YouTube channel. That's youtube.com/Emerging Growth Conference, as well on our Twitter. We are always posting new information to Twitter first. That's Twitter at Emerging Growth C. I'm Anna Berry. On behalf of myself and our entire team, we thank you all for watching, and we hope that you'll have a wonderful, successful, and a happy rest of your week. And we'll see you on again very soon.